Closing bell live today from the Case Alternative Investment Summit here in Beverly Hills. Real estate, been one of the worst performing sectors over the last year as the industry grapples with rising rates, inflation, and work from home trends. But our next guest navigating those cross currents and still finding some opportunities within that space. Joining us now, Jonathan Goldstein. He's the CEO and co-founder of Cain International. It's good to catch up with you here. Welcome.
Lovely to be here.
So you're a private investment firm. You invest in real estate debt, real estate equity, a lot of real estate equity, commercial, leisure, residential, and all over the world. So you have a broad view of what's happening. What is happening?
I think it's fair to say that the industry is still adjusting to the new level of interest rates. But I think it's so easy to be down on the asset class as a generality without looking at the positive spots. And since we've started the business, we've very much adopted a gateway city approach because we believed in the resilience of those cities. We've also engaged and developed, invested a lot in Miami, as well as in Los Angeles and others, and we've found great growth spots. So we're about to open 830 Brickell, which is the largest office block in Miami built for a very long time, fully leased, with wonderful covenants up and down the buildings, at 50% rates higher than we underwrote at the time that we started the investment. So I think it's very easy to simply tarnish the entire class with one view. But I think it is fair to say that there are pockets in the industry that have struggled to come to terms with the new reality. And I think that's predominantly in secondary offices and secondary cities. And you're seeing every day large firms handing back the keys. And I think that's not good for the industry, obviously, that people are so happily just walking away from them.
This new reality is the fact that the cost to service debt has doubled.
Correct.
Is it going to continue to get worse?
Well, I think that there's a number of factors there. First of all, and obviously we can talk about interest rates, but there is a view that maybe we are close to the peak of the interest rate curve.
Is that your view?
I think it is my view. I think it's also clear that the forward curve is taking, however, a slower decline than people initially expected. And there is a debate to be had about whether there is groupthink amongst the Fed and the ECB and the Bank of England. And there needs to be some justification about why rates need to stay at the levels they are. But I don't see them coming back very quickly. So I think people are seeing the cost of capital double. It's doubled over a period of time. What was a base rate of plus a 3 or 4% margin is now 8, 9, 10%. You cannot borrow in the real estate industry for less than 8, 9% today, and that is hurting a lot of people.
So when people want to fund new deals, what do? I mean, the cost of capital has gone up so much, and the access to that more expensive capital is a hurdle as well.
Well, that's why there will be a slowdown in development over the medium term, because the amount of equity that people have to put in to service the debt and to meet the increased costs. Don't forget, we've had inflation. So since the pandemic, we've had significant construction cost inflation and labor inflation. So therefore, it's more expensive to build something and more expensive to borrow. So therefore, that needs more equity. And that is slowing down the rate of development. And that will help in many areas where people have existing office buildings or existing residential developments because the supply chain is shorter.
Do you think projects will thus then get smaller and for less money than they otherwise would?
I don't think necessarily an issue of size. I just think it's the volume of development will decrease over the next 12 to 24 months in major products. And that means that the supply that's coming to the market today will ultimately be used up and will give people an exit.
You said, at the outset, there's been so much negativity that it hides some of the positivity that's been going on. Where are the good stories to tell in real estate? Because, frankly, we hardly hear about them.
Well, we talked about Miami before and the success we've had in our office block in Miami, which has met the demand needed in Miami post-pandemic. We've also had some great success in the luxury hotel space. We've invested in the Oman Group, which has done extremely well. We've just opened a hotel in Boston, the Raffles Boston, the first Raffles in North America, which is really trading off the charts against our expectation. So what you are seeing in the luxury marketplace is that, there is still people with a significant amounts of consumable income, are ready and available and enjoying themselves. And in a post-pandemic world, people want to go out, they want to enjoy themselves, and they want to ensure that they're having service and quality. I think where we have been very selective and where we continue to be selective is you have to invest behind the right brands, because service and quality and delivery are one thing to say, but they're a very hard thing to do. And the reason that we've backed Oman, the reason we've backed Raffles, the reason we've backed the Waldorf Astoria in Hilton is that we've gone to the major players in the industry who we trust to ensure that the consumer will get the right service.
You talked about obvious inflation that's out there. We've seen it for everything from lumber and things of the like. Concrete, what about the cost of doing a project today? How much higher would you say it is? How do you view that?
I think if you look back to 2019 to where we are 2023, I would say the average construction cost is probably 25% higher than it was previously. If you aggregate you itemize the pieces along the road, we're about to redevelop the Delano in Miami Beach. And again, you have to have the right product, which means you can absorb these additional costs. But we're seeing significant construction cost inflation because of that.